Lisa Hylton, and you are listening to the Passive Investor Show.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, ladies and gentlemen. Today, I have a special guest, my friend. We've communicated on several occasions. She's awesome. She has a real estate investment firm, and you'll get into that a little bit later. But today, I have the pleasure of connecting with Lisa Hylton. Lisa is the co-host of the Level Up Real Estate Investment Podcast and founder of LisaHylton.com, a real estate investment firm that was created for entrepreneurs by entrepreneurs to build passive income and wealth through tax-efficient real estate investments. When she is not buying real estate, you can find Lisa hiking, paddleboarding, practicing yoga, taking in evening walks, swimming, traveling, embarking on wine country getaways, and trying new ventures. I really love what you do in your downtime. Welcome to the show, Lisa.
Thank you for having me, John. I really appreciate it.
No. So tell us about your background as we kick it off. So let us know more about you.
Yeah, totally. So I grew up in a real estate family. My father was a contractor. He built 14 apartment units when I was a child. Roughly around middle school, he was diagnosed with a brain tumor. And by college, my father passed away. But because he made those investments in real estate in those early years, that enabled my family to be able to have money to then take care of myself and my two younger siblings. I then went on to do a degree in accounting. My parents were really about us going to school and not necessarily about investing in real estate. So they really instilled going to school, getting a really good education, and getting a good job. And I'm grateful for that because that opportunity enabled me to get the experiences I have today. So I went to school, did accounting, came home, started working at PwC in the Cayman Islands. I ended up a 10-year career with PwC, but during the time I was living in Cayman, I bought a 2-bedroom, 2.5-bath townhouse, which was my first real estate purchase. And I purchased it because, for most people, especially at this time right now in the market, they can resonate with, oh, everyone's buying, you need to buy a house, you need to buy a house. And that was the feeling at that time, and I just bought a place because I loved it. It wasn't necessarily because the numbers worked. But then decided to rent it, and it broke even the first year, lost money every single year after that for a total of 6 years. So after I got the last huge $1,000 bill for AC breaking down, I said, you know what? This is not ago. So I sold it, and I said that the universe has a sense of humor, because after 10 years, and I sold it the 1 or 2 years before I got to the 10-year mark in audit, I then ended up leaving it to go work for an investment manager that raises funds. And I was a fund controller for about 4.5 years, taking care of funds. And during that time is when I got introduced to the whole idea of real estate investing, in a sense, in the way that you can actually make money and build wealth. And I was like, oh, you can make money investing in real estate. Here we go. So from that education is when I started saying, oh, could I house hack living in LA? That quickly went away. And then to turnkeys, to then eventually syndications. And that sort of brings me up to where I am today.
One thing I'm sorry to hear about your dad passing.
Thank you.
And did you say funds?
Yes,
All right,
funds.
that's what I love to talk about.
All
But,
the funds.
let's talk about how you started your firm and what propelled you to start your firm. It sounded like the company
Yeah.
that you worked for kind of made it make sense for you. So
Yeah, that's so interesting. Like, for me, I felt like as though I didn't really set out to be a syndicator. Um, I was introduced to funds because that's the only choice I had. When I started and came in as an auditor, all we have are funds out there. So that's how I started my career. It wasn't like, oh, I'm going to be a fund manager in the real estate space. So I'm going to make sure that, at 20 something, I'm going to be doing this kind of stuff. And then when I got introduced to real estate syndications, it was by accident. I was at this professional development program and I met someone and I found out, oh, they're a syndicator. And I was like, wow, hold on. This is similar to what I do for work. And I quickly realized, oh, I didn't realize that people could do this. Like regular people like me could invest in large commercial multifamily self-storage and all these other asset classes. I always thought it was like, big, the pension fund of California. And that's all I had access to. That's all I knew, these large institutional investors, until I saw there was an opportunity for people like myself. And so once I made that first investment and I started to see the returns on that investment, I was, sort of intrigued onto how to build a business in this space. And then I started to learn from that person about building businesses. And then the first thing I launched was a podcast. And then from that, I started saying, and I got an opportunity in 2019 to create a single asset fund, SPV, to invest in a deal in Atlanta. Raised 500,000 with a few other ladies and was able to make that investment. So the combination of launching the podcast and getting exposure early in the process to raise and put that deal, that small fund together, helped me to sort of solidify that, wow, this is an actual business venture that I'm interested in doing. And that's what started my path.
now, what's the type of criteria you look for in passive investors?
Yeah, great question. So for me, and this is for passive people who want to invest in my deals, correct?
Yeah, why would I, John Fortes, invest with Lisa Hylton? What are you looking
Right.
for at the end of the day?
Correct. Okay. So I am typically looking for investors who are at a point in their investing career or journey where they know within themselves, they're fully confident that they're either in a career or business that they love. Or they may not love it, but this is where they need to be in order to continue to generate the income that they are earning in order to maintain their family and their lifestyle and where they need to be. These people are also interested in investing in real estate. They recognize that investing in real estate as an active investor requires time, and they have an extremely busy schedule, and they know that balancing both isn't necessarily something that they want to do. So they've already self-selected themselves that, hey, this is what I want. Like, I want to be able to get access to real estate investment opportunities without having to go out there and find deals and handle tenants and deal with property management. So those are typically my types of investors. Those are the people who I typically speak to on the phone on a daily basis, providing them information about how these kinds of opportunities can give them access to real estate without adding more to their already full plate.
Yeah, it sounds like we align with the same type of investors. As a result, sometimes it's just solving a problem, right? They might have to invest a certain amount of capital before the year's end because they just exited out of something. And,
Right.
We might have an opportunity that fits that type of investment criteria after they've already vetted us out. So yeah, thank you for sharing that. Now,
Sure.
when an investor invests with you,
Mm-hmm.
I'm John Fortes. I'm looking to invest with Lisa Hylton.
Mm-hmm.
What does your onboarding process look like, and how has it improved since you first started?
Yeah, great question. Oh my goodness. So right now, I'm continuing to get better and stronger in this particular area. So right now, as someone comes to me, they meet me typically via listening to a podcast. They then go to my website, they sign up to get on a call and to learn more about investing with me. So from that, we get on a call, typically 30-minute call, and I get to learn more about their investing goals. They also get to learn a little bit about myself and what my current focus is in terms of the types of deals that I'm interested in. So from there, they might then say, okay, I want to see a little bit more. I will then typically send them an email that gives them access to my Dropbox folder that has information about my firm, as well as some deals that I've done in the past, including that 2019 deal, as well as including deals that I have personally invested in, because I've invested in 5 to date. So that then gives them that experience, like exposure into my world and like the way in which the types of assets I like to invest in. They then, from there, then I will touch base with them. Like, I'll give some time in between there to then touch base with them again to sort of answer any questions and learn more about what kind of deals they are really interested in doing. And what returns, further understanding what kind of return profile from our initial call, because things can change and people might decide that they want to be in like more class C and experience those types of returns versus a B class asset, et cetera. And then once I have a deal in place, typically I'll then, based on the conversations I've now had with them, I can then sort of see that, okay, this opportunity that I'm looking at with this particular sponsor is something that I think that they'd be interested in based on the conversations that I've had with them. So that's typically how I work. I also would say that, it's important for me to also feel comfortable investing in a deal. So I typically am also looking for investors that are also aligned with the way I like to invest as well. Because for instance, if this investor is someone that is interested in, more aggressive type of investment strategy, perhaps like maybe a far deeper value add, for instance, then I will then, I'll go as far as to even recommend other operators that are in that space, because maybe I'm not at that space now. So, being able to respect and honor where people are at in their journey, I think is really important and enables them to get to where they are going to go. And they in turn will help me to get to where I'm trying to go as well.
No, I really like that strategy. And as someone that came out of a deal recently on a far deeper value add, I realized that I really like class A's and B's, and I'm staying away from the deeper value add. It's only because my experience led me to that. I know I like singles and doubles, and that's just kind of my preference. And it sounds like we kind of align, and that's the way you vet your investors through your onboarding process.
Right.
So, no, thanks for sharing that. Thanks.
We interrupt this broadcast to bring you this special message.
Hey, everyone. If you manage your own rental properties, aren't you looking for a more sufficient way to streamline your to-do list and make the leasing process easier? Apartments.com lets you list your units, screen and receive applications, create leases, collect rent, and track maintenance and expenses, all on the #1 rental network for free. That's right, for free. Apartments.com isn't just for apartments. 29 million monthly visitors visit the site for all types of listings, like single-family homes, duplexes, condos, and townhomes. Renters view these specific listings over 100 million times per month. This valuable exposure and a robust suite of resources are available to you as a landlord for free. And it's all online, so you can access this information anywhere at any time. If you're ready to find the perfect tenant, get started today by listing your units on the #1 rental network. Go to apartments.com/John Fortes. That's apartments.com/John Fortes. Why not take advantage of the free tools right at our fingertips? Go to apartments.com/John Fortes. It's free. Now, what is something you had to implement in your business as far as a software, a program, a service for your investors?
Yeah, totally. So as basic as some of the basic stuff, number one, Calendly. So when meeting people, I think it's the easiest part is to be able to send them a Calendly link afterwards to book a time to get on to your schedule. I feel like it helps to cut back, back and forth to schedule something. The second, I love Active Campaign. It's my preferred CRM of choice. It enables me, it captures all my investors. As I get on calls with people, I can also put notes in there. And then when I do my follow-on emails, I'll actually send them from Active Campaign, because then the record is in Active Campaign, which helps me in terms of building those relationships, especially for a 506B offering. So I would say those two are the most important. I love Calendly. That helps me to create everything from presentations to like everything that I post online that is in an artistic point of view or form perspective.
No, yeah, I agree. And for those of you listening, Active Campaign is a CRM, customer relationship management software that allows you to track who you're communicating with. And, if I wanted to look at Lisa Hylton's profile in my CRM, I can see all of our communications that we've had on email and my notes that I've included. So no, I use HubSpot and, use it the same way you do. So
Yeah.
That's pretty cool. Thanks for sharing.
Sure.
Now, what do you do differently from other sponsors that benefit passive investors?
Yeah, great question. So one of the benefits of being a passive investor myself is I am able to see how other people run their deals. And I have invested in 5 to date. And all 5 of them, each sponsor handles things very differently from each other. And it doesn't necessarily mean that it's good or bad. It's just the way it is, For me, I think one of the things that I love and I want to implement as I'm continuing to build out my business is like being able to send videos that even give investors an overview of the underwriting of the deal. Like to me, like as someone who comes from the finance and accounting background and attracts a lot of people from that space, I feel like people appreciate being able to be walked through the underwriting and to be able to sort of see what are some of the things that went in, what are some of the assumptions that you're making to ultimately make this particular deal work. That's the first thing I would say that I try to do. The second thing that I've sought to do is I like to ask questions of investors as well as people in general along my journey. And from that, to be able to say, hey, like, what is it that you don't understand about passive investing or you wish you knew more about, that I can then create, thought leadership pieces that I didn't really necessarily think about that could be beneficial to them, because they are telling me what they are interested in and then essentially providing that and to be able to enable them. So an example of that is I recently spoke to an investor who said to me, one of the biggest things, and I actually hear this a lot, is like, how do I determine whether a deal, like how do I analyze a deal to determine whether it's a good deal for me to invest in? this comes up way more than I think people realize. And sort of having like different types of content pieces, everything from ebooks to like smaller pieces to even doing small podcasts or little videos that all like seek to touch on this subject, that gives people, that meets them where they're at, because not everyone is going to want to read an ebook and not everyone's going to listen to a podcast. So some people are more visual. So you're touching people in different ways.
Let's dive into funds now.
Mm-hmm.
What are the pros and cons from your experience with funds?
Yeah. So starting with the pros, one of the biggest pros with funds is diversity. It can be to the extent that the fund is going to invest in multiple assets. Because you do have, like, sometimes people say like SPVs, but they're technically special purpose vehicles only into one particular deal. So in the fund perspective of investing in multiple assets gives you the diversification that you wouldn't have otherwise. Secondly, it also saves you a lot of time. Because if you are working with a sponsor, that fund manager that you trust, then they're out there building relationships with multiple operators, which then gives you access to multiple different operators. Thirdly, if you are dealing with an operator that is creating their own fund, then this too also saves you time as well, because you know that they are all of the investments, you trust them. So all of the investments that are in their fund, they're operating, they're managing, and like, yeah, so it just lessens your load, and your 50K or 100K or whatever investment you put in is spreading across a variety of different assets that would be impossible to do if you were investing in single syndications for each. So I think those to me are some of the biggest pluses with dealing with a fund. The last one I would say connected to diversity is, by you having multiple different assets, you spread the risk, because sometimes real estate doesn't always perform the way you want it to perform based on things within your control as well as outside of your control. So it helps with the execution risk connected to some of these different assets. On the con side, so funds can run longer than planned. You can have funds that are, I've worked on funds that have been as old as I am, so like, and it wasn't planned to be open this long. It's just that, maybe the market, it was just not a really good time for when they were selling that particular asset, or maybe the investment manager held on to the asset because they were like, oh, I think I can get better money waiting another year, and then it just didn't work. So now, now you have this fund that's been going on for a really long time. So there's that. The second thing is, you just want to keep an eye on expenses, just like any other fund that's out there, index funds, all that stuff. Just keep an eye on the expenses. Obviously fund managers and operators need to live, so there needs to be some expense there in order to compensate people for their time. But just be mindful of that. Take a look, make sure you're all set and you're good in that area. I would say those are the two big items that come to mind for me when I think about, on the con side of funds from
I
a
would add,
passive investor.
as far as a con is, I would add that, you're trusted in the sponsor to pick the deals, and you're not handpicking your deal by deal syndication.
Oh yeah.
But on
Oh,
the
yeah.
side note, if you're investing in a deal by deal syndication, you're investing anywhere from 25,000 or more into each deal. So you're not getting that diversification. So if you put 25,000 or more into a fund, you're getting that diversification that's being
Sure.
handpicked by the sponsor. So make sure you're aligned with the sponsor of the fund for the fund.
This is
manager.
true. This is true. But, one thing that we spoke offline, I think the last time I was talking to you, is in the institutional space, there are funds that are set up in a way where that allows investors to choose. Granted, they are raising larger amounts. So it's okay to be able to be in a situation where they feel that 80 to 60 to 80% of investors are going to pick at least one of the investments. But they have options like that where people can, do a la carte in the fund. Even though they're in the fund, they can choose, oh, you know what, I don't like that deal, but I like this one and I actually want to double down. So I want to put even more money on that one. But yeah.
Yeah, absolutely, absolutely, absolutely. And yeah, we talked about the process of calling down capital offline before we started this. So you can see or you can hear how much we already discussed this stuff amongst our peers and colleagues. So yeah, before we wrap up the show, I want to give you a couple opportunities to just answer a few last minute items.
Sure.
Now, what's one piece of advice you have for the PI listeners?
Yeah, I think my advice to the PI listeners would be, never feel like you're rushed to make an investment on a deal, because there's so many amazing deals that come by every day. And sometimes the best deal you do is actually the deal that you don't do. So taking the time to get to know your sponsors, fund managers, and learn about their processes is worth it to you to feel comfortable about the deal that you're going into. Because the last thing you want to do is think about how to get out while you're trying to go in. If you're thinking about that, then you're probably not supposed to be in this deal.
No, I love that. I love that. And just a side note is, I'm sure you've done this too, is if you have an investor that reaches out and says, I'm still on the fence as far as I'm getting to know you and such to invest with you.
Right.
I come out and I straight up to, I wouldn't invest until I build that trust as well.
Yes.
So however long that takes, it takes, just like it takes me 9 months to a year to partner with other sponsors, because I'm going through my vetting process. Now, my partners that I have, I call them my preferred sponsor list. And that's how I begin to partner as deals come across. So treat it like that. As an investor, I want to make sure if I'm investing with Lisa and her deals, how well do I know you as far as your criteria, your underwriting, and how you manage an asset? Do you have any deals that I can review from the past? Can we talk about some of those deals? So it's all the little questions and, relationship building tactics that I use that maybe helps, other investors. What about you?
Well, it helps me too, because I heard that on a podcast snippet that was out in social media that you said 9 to 12 months, 9 to 12 months. And I was like, wow, John, like I was like, I really respect that, because, similarly, one of the things that I say to operators, I'm currently in the process where I'm proactively reaching out to operators, as well as people are reaching out to me as well. However, largely most of the time when people are reaching out to me, it's like they already have their deal and they're like in a crunch to raise capital. And it's not ideal. It's better to build, just like how you're out there building relationships with operators, is the same way how you need to build relationships with your strategic partners and get to know them. And for me, I reach out to operators that I like and reach out to them to learn about them, to get to know their track record, learn about how they are executing on underwriting. What are some of the assumptions they're making? What are some of the things that they're looking at? To me, I think this is important because this helps you to then build that relationship before the deal. And for me, at least, that is one of the key things that is important to me as I continue to build out my business in this space, is being able to stay true to that and do the same thing on the investor side in terms of building relationships with my investors as well.
Very good words of advice. PI listeners, that was very good. Adhere to that, please. Lisa, how can we stay in touch with you?
Yes, you can one-stop shop, lisahylton.com. That is my website. You can go there and learn more about my, what I'm doing, as well as /invest is my investor form. You can find that and everything. My blogs, my podcast, the whole 9 yards are there. I do have an ebook on funds. It is lisahylton.com /funds. So FUNDS.
Awesome. Be sure to get a copy of that, as I'd probably like to dissect that as well. quickly, what is the meaning behind your company name?
Yeah,
My
that's a
favorite
great
question.
question.
I have to ask it.
So that's so funny. I actually had another name and I still own it. And at first I was like, well, I have only created a website on lisahylton.com. At first I was like, well, do I want to do this other one? So I just said, you know what? This is me. I'm just going to show up as I am. And I figured, it's lisahylton.com for now. And so until, later on, I might decide to create like a completely different entity. But for now, lisahylton.com.
Hey, thank you for sharing. Lisa, thank you for stopping by today. We
Thank you.
really enjoyed the conversation.
I appreciate it.
Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.